All right, guys, what's going on? Welcome to Sunday Night Charts with Jim of All Trades. Good to see you guys. Happy Mother's Day to you. Did you call your mom today? Did you call her? Because it is Mother's Day, and it's certainly a day you need to make sure you love on your mama. She brought you into this world, and she can take you out of it. That's right. All right, guys, what's going on? I hope you're well. My name is Jim. I am a crypto trader. I'm here to help you understand the market from an Elliott wave perspective. Guys, we're going to look at the market from a wave structure standpoint, talk about where it is. Is Bitcoin, we're at a key level for Bitcoin, very, very important level. We're going to talk about why this level is important, and we're going to look at the wave structure. Wave structure is amazingly bearish, in my opinion. I'm going to tell you why. When I say bearish, I mean, obviously we've just finished a very, very bullish wave, right? But it's just finished, right? So it's calling for a move to the downside. There is a move to the downside coming, I believe, and I'll show you why I believe it, but we'll also talk about what to expect if that is incorrect. Okay, so we're going to I'm going to tell you what I believe, why I believe it, and then I'm going to share some thoughts where the market might be going from here, and then we're going to look for the contingencies as well. Where else could the market go? Because let me tell you something, I'm not, what I believe isn't always correct, but I am bearish at this moment, and there's good reason for it. But with that said, guys, I'm not a financial advisor. I'm not here to tell you what to do with your money. You do with your money what you think. Me, I'm just a guy looking at the chart, sharing my thoughts on Sunday nights. I am a trader, but I am a day trader, guys. I'm in and out of the market quickly. I am not an investor. Though you can take how I trade and apply it with investment on the higher time frame levels, yes. But that said, we're gonna track this wave, and right now this wave has currently been doing what we thought it's been. We thought was one of our main possibilities, and we've gotten a really, really nice impulse to the upside. Now, what can we expect from this point on? We're going to talk about the different scenarios, bullish and bearish. Okay, but don't mistake it for financial advice. Please, please, please do your own research, and don't ever take any trades based on just something I say during a live stream. We should never do that. You should always have your own opinion of the markets and your own belief system. And more than anything, you need a good risk management strategy. If you don't have good psychology and good risk management strategy, you'll never be a trader, guys. I don't care how good your strategy you think it is. If you don't have the psychology behind it, and if you don't have risk management behind it, then you really don't have a trading strategy. So please, please, please take some time to develop your strategy and your psychology. That's more important. Your psychology and your risk management. That's more important than strategy. Okay? So please, please, please. All right, with that said, let me tell you where I think the market is doing and where it's going and why I think it. So let me say hi to everybody that said hi to me, and then we'll get started. What's up, Kimosabi? Good to see you, buddy. I hope you're well. Miss hanging out with you, but I know life takes us all different places at different times, but I appreciate you being here as always, man. So thank you, bud. Eddie Bo, hey, man. 61 to 50, yeah, I mean, certainly that's an area of interest. We'll talk about what the wave structure should look like if we're going down. We'll talk about what that looks like and how long it'll take. It's going to take months, guys. It's not going straight down tomorrow. It's going to be months of price action to the downside. It's going to take a while. You got time, but you don't have time at this current level. Not too much longer. You probably got a couple weeks, a couple of days to weeks at this current level. But if it's going down, we're going to talk about what to look for with that. Keith M., what's up, buddy? Enjoy your run tonight. I'll give you the Moon Boy count as always, but I'm also give you the realistic counts as a Bear Boy. I'm not a Bear Boy, but we'll give the Bear Boy counts as well. So Moon Boy and Bear Boy. All right, Jordan Levy agrees with you, Keith. Crashed that market. We'll see. We'll see, buddy. Good to see you, Jordan. E.T. Power. I'm glad you can catch it live too, man. Welcome to the live stream. Glad you're here, Mr. Farrahill. Hey, buddy. Hope you're well. You've been here a long time. Salvador Deza Zero. You're one of the most bearish people I know. I love it. I think it's great. You're at the right channel, I'm sure. Danton, hey Jim, Chainlink moon count tonight. Okay, Dan, yeah, let's look at Link and let's look at the Moon Boy count, see where it might be heading. So yeah, let's do it for sure. Let's see, Slice. I was told you're the Elliott guy. But isn't this wave proof that we weren't in a wave 5 previous, but actually a wave 4, and now this is the final 5th wave? I mean, certainly that's a potential, but actually there's another count for you. I'm going to show you. Love you too, buddy. Thanks. Yeah, I'll. So you were told I was yelling. How long have you've been around here before, Slice? I thought I've seen you around before. You've been here before. This isn't your first live stream, is it? I don't think so. I'm almost certain I've seen you many, many times. So yeah. Okay, all right. Well, your comment makes it things like makes me think. I'm remembering wrong. A little what's that? What's that when you definitely remember something and then all of a sudden you're like, no, that wasn't it. What's that called? What is that called? It's when everybody believes something, like when everybody believes something and then you find out it wasn't really true. What is it? Oh, I'll think of it in a minute. A rug pull. Mandela effect. Yes, thanks, Nick. Thanks. Yeah, that's the Mandela effect. Yes, that's exactly the word the phrase I was looking for. You're in my mind, Nick. What's up, buddy? Good to see you. Thanks for letting me know. Let's see. All right, I don't think Jeff Aldano. Hey, buddy. Hey, good to see you, man. I don't think I've seen you specifically in the chat for a while. Good to see you, man. I hope you're well. All is well. Am I still singing? Well, I'm in a play right now, actually. Doing Diary of Anne Frank. So, yeah. But I sing a little bit with my wife and stuff, but not really. Not lately. Haven't been in a musical in a minute. Been a couple years. So, yeah. For those of you that don't know, I do a little bit of what is it? I do a little bit of a community theater as a hobby. I play disc golf, community theater, and love Jesus. That's kind of you know me and my life if you know those 3 things. So community theater is probably the lower end of that spectrum. Disc golf is up there pretty good. Love it. Got a tournament this weekend. All right. Well, with that said, guys, let's jump into the charts. Don't forget, again, I'm not a financial advisor, but let me tell you what I'm thinking. And I'll tell you where I'm spending my money and what I'm doing in this weird and scary time. All right. Okay, so the way I look at this way, I look at this and say, okay, we have what seems to be a super potentially clear flat. Okay, at least that's the way it appears. Okay, you've got a 3-wave that begins right there. You got 3 waves to the downside, and then you got a 5-wave structure. This right here is a 5-wave structure out of a textbook. It is just absolutely glorious. We're going to break that down shortly. Look at the RSI and how the RSI shows the different wave stages that we're in. I'm going to talk about the wave stages in the RSI so that you can understand why I'm bearish right now, why the RSI is screaming at me right now as a little bit bearish. Okay, I'm going to show you. That doesn't mean we can't hit the high. That doesn't mean we can't take out the all-time high. That can be taken out from an Elliott standpoint. But we've got signs that a wave has just finished, okay? And we're going to talk about the different implications. So you really, really, really need to tune in tonight and just pay attention to what I'm saying, okay? All right, so when I look at this chart, I'm looking at this, and although the B wave was trashy, don't like the B wave a whole lot, that looks very good, like a flat. And so once you kind of see that structure as a 3-wave, and then you look at the prior structure, you say, well, we got some kind of 3-wave right there, and then we got a 3-wave right there. And that second 3-wave came back 90%, guys. I mean, when a 3-wave move comes back 90% or higher, then we're looking on the higher time frames for a potential flat. Let's pull the retrace here, the retrace fibs. Boom. I'm wrong, guys. We have not hit 90 yet. We have come very, very close, but we have not hit 90%. Now, for those of you that don't know why 90 is important, 90% is important for a flat. Okay, in other words, if you're looking at a structure and you're calling it a flat, the B wave of the flat must come a minimum of 90% retrace of the A wave. Now, it can go 100% and it can go 100 and plus percent. You can even go, 100 and the 1.1618. It can go 160%. Sorry, the 1618 extension. You can have a retrace that goes beyond the A wave. In other words, here's the potential A wave. The B wave for a flat needs to be 3 waves, and it needs to come back 90%. We haven't quite tagged it yet, but we're really, really close to tagging it. I think we'll probably tag it. Then looking for a C wave to come down fast and furious in 5 waves. A flat then is going to be a 3, 3, 5. Okay, so that's what we're looking at. 3 potentially, 3 potentially, and now if this gets up to the 90% or higher, which we have higher targets. Okay, if that happens, then we're looking for 5 waves. Okay, 5 waves after that's done, and that would be a large time frame flat, and I would see that as the W wave of a much larger, higher time frame wave structure. Okay, so in other words, we go to the weekly chart. Let's see. Let's go to the 2-day chart here for a moment. Here, yeah, you go to the 2-day chart right there, and you can kind of see that 3 wave. That would be the first. Boom, and then something else like that. Then all of a sudden you've got 3 waves back down to the downside, correcting this entire move as a finished 1, 2, 3, 4, 5. Okay, so if this is a finished leading diag of some kind, where you have 5, 5, 3, 5, 3, 5. Okay, and you got 5 waves here in the 5th. Boom, we're looking for a multi-year bear market in which we get 3 waves down. Retesting these levels before we smash up to the upside. In other words, this is the beginning stages of mass movement of this market. This is just the beginning, guys, but we need a retest of real support. Real support for me is anywhere between, guys, I hate to say it this low, but anywhere from between about, let's say, as low as $10,000, though I don't think price is going to get as low as $10,000. Okay, but it could. Okay, it could be as low as $10,000, and as high as, let's just say, $50,000. The real price support for Bitcoin is in this zone right there. That's where real price support lies. That's where it is. Okay, and when I say real support, what I mean is this: it's the heaviest support. Okay. That's where price is going to find its strongest, most stable foundation. Okay, in this range, and then hopefully that'll support a price move back to the upside. If Bitcoin's going to be around forever, for ages, it's going to be what we hope it is. Then we're going to see it go up to over $200,000 and much, much, much higher. Okay, we're talking $1 million from here. Okay, because. Now $1 million as it relates to the U.S. dollar, right? So, anyway, I think everybody's looking at this wave saying, "Oh yeah, we definitely gotta go up now, right?" No, we don't. We don't have to go up now. This could be A, B, and we could get C. Okay, W, X, Y. Okay, so we don't have to go up. That could be 3 waves right there. Now that 3 waves can be the first of larger 3-wave move, which is what I'm advocating for. It's what I'm saying is as a strong possibility. Okay. Now, when you look at the chart, let's look at the. Let's go back to the 2-day for a moment. You can kind of see it. Okay. When we see, let's go to the 4-hour for a moment and just kind of look at this wave. Okay. This is a beautiful impulse wave. Okay. Let's talk about its features. Okay, and let's look at the RSI and just kind of understand it. Best I can tell, we started out with a leading diagonal. Okay, boom, and that's an impulse wave. That's an impulse wave. That's a leading diag. Okay, and that's wave number 1. That's wave 1. Very, very, very small wave 2. Okay, but there's a 1 and there's a 2. Okay, now what? Then you had another 1 and a 2. Okay, wave 3 to here. All right. Then you had this right here, 4 right there, and then there's wave 5. And all of that, 1, 2, 3, 4, 5, is wave 3, okay? Now, there's another way you can interpret that a little bit. And you can say wave 3 ended right here, which that's not a bad concept either. Yeah, that's actually a little better. 1, 2, 3, 4, 5. That's wave 3. So we got 1, we got 2. This is wave 3. Then we're going to call this wave 4. And what that is a flat 4. And now we got 5. And now we got 5. And 5 looks to be finishing if it's not finished already. But there's 5 waves right there. That's 5 waves, best I can tell. Now, what's the RSI doing? Well, in a wave, when you have 5 waves, 1, 2, 3, 4, 5, like that, when you have an impulse wave, we expect the RSI to hit its highest peak at wave 3. So wave 3, the RSI is going to be overbought big time, okay? And it's going to be at the highest peak. Okay, so for instance, you see that peak right there? This peak coincides with this peak right here. Now that's the wave third of the third. That's wave 3 of 3. Okay, you had a bit of a pullback in price. Let me see. Let me remove my. There we go. We had a little bit of a pullback here, and then we had one more high created. And what that created was divergence, where you had a higher high in price. Okay, so we had a high made here, a pullback, and a higher high made. Okay, and this is in the wave 3, so we're dealing with this overbought condition. Okay, that's a wave 3, and wave 3 generally is where you see the overbought condition, not just a little overbought. It's peak. Its highest peak, 80, in 70 to 90 range on the RSI. It can go higher than that if it wants to, but that's common, right? So yeah, we got an overbought condition here with divergence. Okay, so we have regular divergence where you have a higher high in price and a lower high on the RSI with the corresponding peaks. Okay. That's letting you know that there's a correction incoming. Well, so what followed was a 3-wave correction, and that's a flat 3, 3, 5 right there. And that correction formed a 3-wave shape right here in the RSI, creating, once it finished, an oversold condition that was also accompanied with hidden bullish divergence. What's hidden bull? When the RSI makes a lower low compared to the previous peak, but when you see the same peaks on the price, it's nowhere near. Like the RSI took that level out, but price was nowhere near it. That's hidden bullish divergence. I don't know if I said hidden bear, but I meant hidden bull. So that's hidden bullish divergence. So it was followed by an impulse wave, okay, boom, to the upside. So what does that mean? Well, notice that RSI made a lower high at this level. We got a lower high in the RSI, higher high in price. That's divergence. Now what we have here is what we call double divergence. We got divergence on the small time frame, boom, right there, okay, indicating this move down. We have hidden bull divergence there, indicating a standard wave 4, okay, followed by a spike to the high. What I often call the FOMO wave. This is the wave that likes to get everybody FOMOing in to the market because they're like, oh, here it goes. Okay, this is the FOMO wave, and they're kind of playing around like they're going to keep going up here, and they might still come up and hit this high and then reject it. That's probably the way it'll play out. Maybe. I say probably, maybe. It's always that air of doubt. You always have to believe. You always have to have the proper skepticism to your ideas. But that's a common play. I mean, that's a very, very common market play. All right, so anyway, yeah, we're seeing all the signs here on the 4-hour for the divergences in the RSI, pointing us to the fact that we have what could be interpreted as a finished 5-wave move. Boom, boom, boom. Okay? The rules of the wave are wave 4 can't encroach into wave 1. Done. That's fair. Number 2, wave 3 cannot be the smallest. So let's measure wave 1 against wave 3. Okay, because wave 5, and let's just kind of measure and see. So we're going to measure wave 1 with our extension tool here. Boom. And then we're going to start at the bottom of wave 3. And you'll notice that wave 3 peaks above the 1-to-1 extension. In other words, wave 3 is higher than the 1-to-1 100% mark. In other words, wave 3 is not smaller than 1. It's bigger than 1. Not much bigger, but it's bigger. The rule isn't that wave 3 has to be the largest wave in an impulse. It most often is. Rather, the rule is wave 3 cannot be the smallest. So if you apply Elliott properly, you'll understand that wave 3 can't be the smallest. Okay, we generally look for divergence between wave 3 and wave 5, which we have here on the 4-hour time frame, which, by the way, the 4-hour time frame is the time frame that most of the banks trade off of. Okay, so the 4-hour chart for me is the most important chart. All right. So, yeah, when I see what I'm seeing here, I've got a break to the downside here. Boom, I got a break of structure. I've got a retest of that with divergence happening in this wave. There's a little bit of hidden bull working here, so I wouldn't mind seeing a spike to the high and a lower high in the RSI created, and then a move down. And I see that as a potential end to this flat. Boom, boom, boom. And then we'd expect the wave to play around in this region for the next several weeks, if not just this week and next. It should come down, then play around up here for a while before it finally breaks down further. So in other words, we're going to be playing in this area. We have some time to let this wave develop. There's no need to FOMO in or out of trades. However, this is what I would expect to see from a wave structure standpoint if we're nearing the top. If you want to see something else, I mean, if you want to look where this has happened before, let's just go back and look at this top here. Okay, if this was the top of something, you had an initial wave, and then you got a lot of playing around, okay, a revisit of the top, and then playing before it just finally moves. So we're going to get a lot of chop and a lot of playing because there are people in this world who are thinking, oh, this is very, very bullish. Now, you happen to be on a channel watching a guy who thinks this is very bearish. I just tried to explain why I think this is bearish from the signs I'm seeing in the RSI, from the wave structure count of this wave, and from the wave shape that I see. That, for me, is very indicative of a finished correction with an impulse that looks finished with a proper wave count. For me, when I look at that, I'm like, man, I'm seeing all the signs of standard wave structure that I expect to see in a finished wave. So with that said, I look at this and I'm like, okay, that was a nice bullish, fast and furious wave. It's also an idea I've been talking about. How long have you been on this channel, guys? And you've been hearing me talk about this flat. One way they made it really hard for us, and this is what made it difficult to catch this flat, was the way this wave went up. First, we didn't get to our target zone down here. It was truncated. Okay, the extension here didn't even hardly made the 786 extension. You say, what are you talking about, Jim? Well, one of the things that we were looking for is you pull the fibs on the first wave here, the W wave, then you had the X wave. And you'll notice we barely tagged, if we even tagged at all, the 786 extension of the first wave. Okay, so in other words, boom, 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 786. I would love to have seen it gone through the 786 and found its place somewhere down here, mid 1-to-1 786, or even down here to the 1-to-1. That would have been, for me, better range. Okay, I would have also loved to have seen a little bit more of a feigning to the downside, a little bit more of a look like it needed, like it was going down harder before it went back up. But we've been calling for this wave structure for quite a while, at least for one of my main ideas, and certainly it has played out. All right, so now what we've got here is what appears to be a finished flat. or a very, 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 very close approximation to a finished wave structure. So, looks like we have a finished W wave. Now, this is a finished X wave or a finished A wave, and this needs to go up just a little bit more to finish for the B wave. We need a little higher for it to be, if we're going to call it B. If it doesn't go any higher, then we're going to call it X, and we're going to call this W, okay? And then we're going to be looking for a Y wave. That means we're looking for 3. So, here's a couple things. If this goes up a little bit higher, okay, a little bit higher, it makes another high, then we're going to call this the B wave. We're going to call this wave B. And if that's a B, we're looking for C. And C is always 5 waves. Always, always, always. So, if the C wave is 5 waves, that's good. That gives us something to look for. We're looking for a fast and furious wave that comes down fast. Okay, however, if this doesn't go up any higher, we did not come back 90%. We can't, as we're going to follow Elliott rules properly, we can't call it C, an ABC. We'd have to call it a WX, and now we'd be looking for Y. And the Y, okay, is going to be 3 waves. So that's kind of what we're looking for at this stage if this idea is correct. Okay, number one, I use a qualifier word, if. If I'm correct in understanding this wave structure as a flat, if we don't go any higher, if we have already peaked and we just start coming down from here and we've already made our high, we did not retrace back 90% of the first wave. We did not retrace back 90%. Okay, let me pull the fibs here. Boom. You'll notice to get 90%, we need to be at 105.7 roughly. $105,000 and $700. 105,700. All right? So, if we go up to the 105 range and go past that 105.7, then we've retraced 90% of the A wave. That means we'll be looking for a C wave of 5 waves. Okay? Boom, boom, boom. Okay? Moon Trays, just got a quick question, buddy. Do you understand Elliott wave theory? You just need a quick yes or no. I'm an Elliott waver, and I'm showing you a wave structure. I've already spent. You probably just came on in the middle. You need to backtrack and then understand the wave structure that we're looking at. All right. So if this has found a peak here at where it currently stands and we reject from here and we don't go any higher, okay, then that means we did not come back to the required 90% for a flat. That means we would not be looking for an ABC. We would not label it ABC. Okay. No, that's why I asked. That's why I asked you Moon Trades, because you basically were just telling me you didn't know Elliott. So you got to understand what I'm doing here. I'm giving you an Elliott wave perspective on the market, plus an overarching view of the market from a geopolitical landscape. So really, really balanced view of the market. We prepare for bullish and bear scenarios. And so, we're talking about the bear scenario at the moment. Okay. All right, so if this wave structure is correct, if I've identified this as a flat properly, and it's already done, it finished, and I've already shared why I believe it's finished with from the RSI, or potentially finished. Okay, I've already made that case. I've already at least shown you what I've been looking at. Okay, and it doesn't go any higher, then we're looking at WXY. So that means the first wave was a W, this is an X wave, and then we're looking for a Y wave, and Y would be counted as 3 waves. So that means we're going to go down in a complex manner. 3 waves, complex. So this is really, really important, right? If we don't make the 90% retrace, or if we do make that 90% retrace, instead of coming down in 3 waves, we could come down very fast in 5 waves, very quickly. Just as fast as we went up in this wave, we could come down equally as fast, if not faster. Okay, sell-offs tend to be faster than pumps, okay? And we could sell off even faster. down to this range. No problem, okay? Okay. So that's that's the bear scenario, guys. Basically, that's what we're looking at as far as the bear count is concerned. Let me see one thing real quick, guys. Hold on one second. Okay. All right. So, what are the other ways we can look at the current wave structure? In other words, the next question needs to be is, okay, Jim, you said if that's a flat. What if that's not a flat? And that's a really, really good question. What if this is not a flat? How would you interpret the waves that we're looking at? How would you count them? Oh, and if you're new here and you don't understand Elliott wave theory, basically, let me just give you a quick. Elliott wave theory is about fives and threes. That the market is made up of fives, fives and threes. Okay, and every wave has a 5-wave structure or a 3-wave structure. And those fives and threes go together in combinations of repeatable patterns. That if we can identify the nature of a wave, whether it's 5 or whether it's 3, okay, and then put it together with the previous 5s and 3s, we can really get a sense for what the market might be doing. And we do it across all time frames, okay? And so, for instance, right here, just to kind of show you, when you step back and look at the weekly chart, for instance, what you notice here is that this is a big 5-wave move. 1, 2, 3, 4, 5. That's 5 waves. Okay. If I zoomed in on this wave 1, we could count 5 waves to the upside. Though it's harder because the data isn't as readily available in that, and it's just kind of an impulse. Okay, if you look at wave 3, it's a lot simpler because it's a bigger wave, right? But you can see 5 waves in wave 3. So you got 5 waves here. So the subwaves are countable, okay? Now, if you look at this wave 5, this proposed wave 5, you can count the subwaves as well. And what you notice, you got 1, 2, 3, 4, and 5, okay? So you see 5s here. This is impulsive. This is an impulse. This is the market moving in what we call impulses. All right, and that's the way markets move. They impulse and then they correct. Okay, you need to see a 3-wave shape. Let's look at a 3-wave shape. Here's a 3-wave correction. Boom, boom, boom. That's a simple ABC or a WXY, and there's a reason why we can interpret this as 5, 3, 5. Or you could interpret it as or 3, 3, 3. And I say or because it's really hard to tell what these waves are. But I think it's a 5, 3, 5, just a simple correction. Okay. And yeah. So there's a 3-wave move. You'll see that this correction right here was a very simple boom, 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 3-wave move there as well. It's complex in its nature, but it's a correction nonetheless. You'll see this correction right there is 3 waves. There's 3 there. All those 3-wave moves are going to the downside. They're corrective, while the 5s are moving to the upside. That's impulsive. Okay, 5. Okay, 3, 5, 3, now 5. Okay, so what comes next, guys? What comes next? Well, 3, but it's of a higher degree. Why? The 3 is going to be bigger than this, and it's going to be bigger than this, and it's going to be bigger than this. Why? Because we have 5 waves in the macro. That means we need a larger, comparable sized 3-wave move retracing the entire thing. Okay, so that's kind of where I think we are. Okay, so when we pull the fibs from beginning to end, if this is the end of this wave, then we're looking at a 60% retrace, pretty standard, okay? A pretty standard move, 60% retrace. We need to see it in 3 waves, and they're going to be 3 complex waves, and they're going to be large. So the way I'm looking at this is that that's 3. This is 3, looking for another 3 down, and that's just the first wave. So that 3, 3, 3 is going to be a W wave of something much larger, okay, like something like that. Okay, now I mean, in general, that's going to be a 3, 3, 3 complex correction. That brings us down to the 786 extension, okay, which is about $23,000, just the way I drew it. It could get as low as the $12,000 range at the 883 extension. See what I'm saying? Okay, so that's kind of where we are, guys. That's kind of what I'm looking at here as far as of the major bearish ideas. Okay, so where we are in this wave then, okay, is we've got an A wave or a W wave. We've got a B wave or an X wave now. And again, I need to see a little bit higher target to call it a B wave. And depending on the target that we hit, okay, if we hit that 105.7 range, then we'll be looking for 5 waves to the downside. 5. We'd be looking for 5. That means this is going to come down fast. Okay, and if it comes down fast, more than likely we're coming down right here to about $50,000 with relative speed. Okay, here's what that would do for the R. If we did that, we'd get down here, okay, with some relative speed. Okay, and the RSI would be down here, most likely. All of a sudden, we've got some hidden bullish divergence on the chart. We'd be looking for probably something complex and fast back to the upside. 50 to 60% retrace of this wave. Okay, so you'd have an opportunity here for a buy and a hold. So if it's going to keep rocking, okay, so this might be a buying opportunity down here, depending on the nature of this pullback and how it comes down. This might be a buying opportunity for you. It may come lower as well. It may get down here to like $39,000. Might like to wick this area, boom, and then V-shape back to the upside, then pull back, and then give you some kind of 3 wave, or it could go up for a moon boy count. We can talk about that, there. But so if this comes down impulsively with 5 waves, then guys, again, once you get that 5 wave structure, okay, then we'd be looking for a buy opportunity. Eddie Bo says there's room for the to go up higher in the weekly chart. I mean, sure there is. Let's just go back, Eddie. Was there room for this to go higher on the weekly? In this RSI, was there room for it to get higher? Mm-hmm. Yep. Yes, there was. I want you to understand something. You see this pullback right there? Okay, that's that pullback right there. That was from 54,000 down to 39,000. I mean, that was almost a $20,000 move in price, bringing that little correction. Okay, so yeah, I mean, there's room on the weekly chart for moves, no doubt about it. But the question is, what is the wave structure? What is the wave structure showing us? What is it telling us? Right? Take a peek at this wave right here. Boom. Boom. See that divergence between wave 3 and wave 5? That was telling you down was the direction, right? Because it did come back up. Okay? It did come back up. But look, there's plenty of room for this to go back more up. There's plenty of room for it to go up, right? But it just rolled over and came down. Okay? So here you have a peak, and a peak. Boom. A peak, and a peak. I'm looking for some kind of move down. That's what I'm prepping for. That's what I think is happening on the chart. Something to that effect. Now, again, I don't have to be right, but that's the way I'm looking at the weekly chart. Great observation. There is room for it to go up. It can go either way. Guys, it can be bullish. It can be bearish. But again, Wave structure and the RSI for me is kind of bearish to me. That doesn't mean we can't hit the high again. Okay. Notice too, something I pay attention to is when you see that trend line right there. When RSI can't get above that trend line, then the momentum is still down. So I would pay attention to this trend right here. So as long as the RSI stays below this trend line, the momentum will be more and more to the downside, unless it breaks it. But even then, because the nature of this peak, it's probably, we don't have much more to go up, I don't think, or as far as wave structure. If we have more to go up, it's one more wave, fast and furious. Let's go up and hit 145K and come down. Don't even have to go that high. All right, so if I'm wrong, what if I'm wrong? And I do want to say that, what is this? What could this be if I'm incorrect in calling this a flat? That's a great question because I don't see much. But what I usually say is what it appears to me is that this will have finished something. Okay, it could be a WXY, for instance, or you could have for instance, you got a W. Then we can maybe call that I don't know if that's a triangle or not, but some kind of three-wave move there, and then boom. Let's do it this way. Let me try it this way. What if we say this is what if we call this 3 there, 3 there, and then boom, boom, boom. It's just a double correction with a truncated second wave. See, that's the part I'm having a hard time with. I don't like that truncatedness. So interpreting this as anything other than a flat, it just doesn't make a whole lot of sense to me. But let's just say something 3-wave-ish finished here. This is an impulse wave. I would expect to see some kind of a shallow retrace. I would like to see it, down to the 382. That would be a nice area. What I just drew right there came right to the 382, right to this level right there. Okay, find some support and then let's go. And let's go hard and fast. And what we would see is a 5-wave move. 1, 2, 3, 4, 5. We get up to 150K real easy. Okay. So that would be an ideal wave for me. Something like that. Okay. As the bullish contingency. But we should get some kind of pullback here. Why? Number one, this is price resistance. This is the mother of all resistances, isn't it? $100,000? Come on, guys. It's the mother of all round numbers. Okay, the market likes round numbers. Number two, $100,000 has been the target. It's been the target ever since Bitcoin hit $20,000 in 2017. At the end of 2017, whenever it hit $20,000, everybody's been looking for $100,000 Bitcoin since then in 2017. Well, they were looking for it to happen a lot quicker than it happened. But the wave went up, right? And finally, it hit $100,000 in 2024, okay? But, don't think it's just going to just fly through the mother of all targets. No, it got rejected off of that target. Now what's happened is we've revisited that target. We're revisiting it now. And I think a lot of people are looking for this thing to fly past it. It's just not it's not the way markets generally move. This is just a retest, double top, an M formation, however you want to interpret it. This is most likely going to find major resistance and we get another crack to the downside. Another sell-off is coming, more than likely. A second wave of selling is coming. We had a wave of selling. Okay. We had a buy, we had a pump, a revisit. Now we get another wave of selling, and it's going to be more fast and furious, especially as this begins to break its structure to the downside. If it does it with relative quickness, then you expect this to go fast and take this low out and keep rocking with relative speed. If it gives a 3-wave pullback and then stalls a little bit, if it begins to stall here at 3 waves, and it's a small short 3 waves, that might be your buying opportunity for a very fast and furious pull to the upside. The way I would personally trade it, if you want to trade it, is if this creates a 3-wave structure, okay, the moment it breaks, see that trend line right there, the moment it breaks that you want to be in on that. That's the confirmation, potentially, that we're going up. The thing is, and here's the thing, and here's the hard part about it, you always need stops, right? But yeah, I would really like to see this come up to 105.7 first. Okay. Then if we get a wave 1 and a wave 2, and then it comes down again, right? There's a 3-wave move. But if this starts coming up, finds resistance on that trend line, boom, coming down, that would be a nice 1-2, 1-2 to the downside with big time movement. If this breaks through, finds support, okay, then that's when we get more bullish for a bigger move to the upside. So that's what I would be expecting to see. It doesn't have to happen. That doesn't have to happen, guys, but that's what I would expect to see. If we're going up, we're going to get a bit of a pullback where we are. It should be fairly shallow. It should be shallow. And then a push to the upside. So that's the bullish scenario, guys. That's the bullish scenario. Okay. Okay. Let me see something here. Just reading the chat here. Okay. So, what are we doing? Where are we going? Well, I mean, I kind of think I'm biased to the multi-year bear market that we're in. That I think we're in, looking for more downside. That's kind of where I think. But am I ready for some kind of a massive pump to the upside? Yep, you bet. You bet. Would love to see it. It would be just fine. Let's take a peek now. Let's do a little correlation here. Let's look at Ethereum and XRP and say, okay, what are those charts saying as far as wave structure? Are they painting the same picture? In other words, if we're expecting a 3-wave move or a 5-wave move to the downside to take these lows, is there a similar bearish structure that we can find on XRP or ETH or even ADA? Are the other charts pointing with the similar structures to the same direction? Or do their charts really point more to the upside? In other words, when we look at Bitcoin, we don't look at it completely isolated from the rest of the market. What we try to do is look at the evidence on multiple charts to say, is there any evidence that we can put together from these multiple charts that are they all pointing the same way, or does my analysis of one kind of contradict the analysis of another? And then which chart looks more clear? So that's why the second piece of our analysis on Sunday Night Chart, yes, we do a deep dive into the Bitcoin structure and what we're seeing, but we don't look at it isolated from the rest of the market. So what we need to do is correlation analysis, and that's the next piece of it. So that's what we're going to move into now, is the correlation analysis. And we're going to use Ethereum as a nice correlating factor. We're going to zoom out to the 4-hour, because the 4 hour is really, really important. And what you see here is a massive straight up pump here out of this wave. But what is that doing? What's going on in this wave here? And what is this wave what is the structure of that wave? Well, one of the things I like to do is look at the Fibonacci relationship of the waves, and this is a retraced wave. So I'm going to pull the fibs from the top here down to the bottom of the wave and look at where we've retraced. And what you notice is that we've retraced back to the 441 extension. Retrace. Now you say, what's the 441, Jim? I don't know about that. Well, the 441 is the average of the 382 and the 50 retrace. And what I notice about wave fours is they often come almost directly to the right between the 382 and the 50, which is why I put the 441 on my chart, because it's the average. It's the very middle mark between the 382 and the 50. So I'm proposing that this could be a three-wave move. It's a 3, sideways 3, and then another 3 right there. It's a WXY, three-wave correction, wave 4. You say, why do you think it's a wave 4? Well, because the oversold condition here, very deep and oversold, okay, happened right here. All right, that's point number 1. Point number 2 is if that's 3 waves back up, came to the 441, which is the 382 retrace, roughly between the 382 and the 50% retrace, which is often the level of wave 4. If this is a proposed wave 4, it does not encroach into the level of a proposed wave 1, which is right here. Okay, there's a proposed wave 1. In other words, it doesn't break any rules as far as wave 4 and 1 is concerned. We have a retrace. And then finally, if you look in the 12-hour, it's even more clear that we have major hidden bearish divergence between the top of this wave and the top of this wave, and the same tops on the RSI right there. We have hidden bear. Okay, majorly overbought here for this correction. I wouldn't be surprised to see another hit to the low just like that, and that is a proposed 1, 2, 3, 4, 5. Granted, if that is a wave 4, it is very big, but it comes back to the extension we expect to see in this kind of move. It would not surprise me to see one more hit to the low. 5 waves, fast and furious, taking out the low before we see a relief pump after that. Okay? So I would not be surprised. So in other words, I have another chart here. I have another chart that says, hey, yeah, the wave structure I would expect to see would be 5 waves. 5. Fast and furious to the downside in a 5-wave pattern, which correlates to our idea of this being a flat that comes back 90%. As long as this goes up a little bit higher, just a little bit higher, boom, looking for 5 waves to the downside, taking this low out. There you have 2 charts doing the same move. Okay, 5 waves taking this low out. Ethereum 5 waves taking this low out. And they would correlate. That would correlate. That would be a very, very fine way to look at those waves. Is it the right way to look at the waves? I don't know. But notice the second piece of it is I'm saying to you that this is just the beginning of major movement to the downside, going out to the daily. This would just be the first 3-wave move then we'd have a major correction back to the upside, followed by 3 waves down later. Well, if you look at the Ethereum chart, you'll notice that you've got this move here, boom, boom, boom. I could totally see a 3-wave move back up, followed by more downside, okay, to provide, hit a target we would expect to see Ethereum hit if we've interpreted these waves correctly. Now, I'm not certain that we have, because there's a chance, again, the bullish scenario says this is not a wave 4, but this is actually part of an impulse wave that's going to continue to the upside. And if that happens, then we have a real interesting wave structure here that is very, very challenging to understand. in Ethereum for sure. Now, ultimately, I am bullish on Ethereum. I do think Ethereum is going to pump eventually. I think Ethereum is the new banking for the future. I think there's a lot to love about Ethereum, the way I look at the market. However, this from a wave structure standpoint, I'm not in love with this chart. I feel like this low needs to get taken. Okay. Now we might be getting ready for some kind of 3-wave and then get another 3-wave down, but this low seems like it needs to be taken. That the way we're going to count Ethereum's wave is 1, 2, 3, 4, 5, like that. And then we've got a W. Here's X. Now, how is Y going to come? Is the X finished, or is this part of a larger X wave? And so I'm challenging my way of thinking about it. What if this is part of a larger X wave? Then we get Y. So if Ethereum begins to pump, okay, that means Bitcoin also should pump. We should look at that from a bullish perspective as well. So I think there's a case to be made for a downside move, okay? Sorry. Yeah, 106. I had 105. 105.7 was my target. Adrian, what's up, buddy? You made it here for a live tonight. What's up, man? Yeah, I'm still bearish, buddy. I've been talking about it for a while, but I'm also contingent upon the bullishness. But yeah, still bearish. See, 105.7, 106 is a great number. Celinda. So yeah, that's a fine. That's a fine target. Okay. So we've looked at Ethereum. Ethereum's a bit of a challenge. I'll be super honest with you, as I always am. But we are sitting at the 441. So if we get an impulse back to the downside to take that low out, I wouldn't be surprised, and that would be a nice wave 5, and that would give us our divergence we expect to see between the bottom of wave 3 and the bottom of wave 5. And that would be 3, 3, 5. Okay? Where we go from there, I'm not sure. Okay. All right. There it is. There's so let's take a big XRP as well. Do we see any similar price movement there in XRP? So let's go to the daily here. All right. So what are we seeing here? Well, actually, let me get on a different chart. Oh, my eyes are so bad I can't see my charts. There it is. Okay, there it is. Perfect. Go to the weekly chart. What do we got? If you look at the way price action has happened in the past, you see this wave right here? See that move right there? Boom. Followed by another wave that came down, took the low. That's kind of where I think we are here as well, where we have this move up. We might be setting up. Now, there might be more up to go, but we might be setting up for another 3-wave move to the downside. Let's give them take this low out, fill in this gap here. It's not a gap so much as a single print, right? That's a single print where it goes straight up. But the market, this market does not like single prints, okay? here's the single print where it just went straight up. Boom. And what happens to single prints? Boom. The entire thing gets taken back. Here was another smaller single print. What happened? The entire thing. Okay. So now we have another single print here. Okay. Generally, the normal pattern is that single prints get taken back all the way, the entire way. That's the normal pattern. It would be nicer to see XRP start not single printing to the upside, okay, but to start forming much more, much less volatile wave structures, okay. All right, Eddie. Good to see you, buddy. Glad you came by. So yeah, XRP, but this wave structure, the problem I'm having is that this doesn't give me the oogly googlies that it's finished. I don't love it. But something interesting happening here. I mean, this wave is just nasty ugly. Okay, so I don't read it very well, but it has a similar feel. Ugh. Excuse me. It has a similar feel to this wave right here. You see that wave? Has a very similar kind of shape to it. What happened after this wave? Well, we got a very bearish wave, right? So this could be 3. It also could be the end of 5. Now you say, how would you interpret it as 5? Well, what if that's a flat, guys? Check this out. What if this is your W wave right there? And this is X right there. And now Y, okay, is happening like this. 3. And what if this is 3? And then we get 3 more. Like that. Then all of a sudden you got a 3-wave move, WXY, taking out this single print. Boom. That is one way to look at that wave structure. But I'm not a fan of this wave. As far as when I say I'm not a fan, it just as an Elliott wave structure trader, it's not pretty, and it's not super easy to read by any stretch of the imagination. So, but nonetheless, we have the potential here for a maybe a large move down. Now another. No, I don't like that. Never mind on that. I was going to say something, but I don't like it. Now that I'm looking at it. Okay, well, so there I am, guys. There's my analysis as far as the wave structure is concerned. At the end of the day, the market can go up and it can go down, right? And I know a lot of you say, "Oh, Jim, it can go up or down." Nice TA. Well, I've told you my bias. I'm biased to the downside for the reasons I shared at the top of the live stream. If you go back and look at that, if you did not catch the beginning of the live stream where I explained the wave structure, 5s and 3s, and how 5s and 3s look with the RSI, you should definitely go back and watch that. It's definitely worth a listen. So, yeah. But that said, that's my overall analysis. Now what we want to do as we finish up the charts tonight is just take a peek at some of the other charts and see what they're saying. Let's look at the NASDAQ. Let's look at the S&P. I had a request by somebody. I didn't get to say hi to Sean Silvestro. What's up, dude? Good to see you, man. Glad you're in here. And then let's see. Seth popped in. I saw his name pop up. There's Seth. What's up, buddy? Good to see you as well. Anyway, just wanted to say hi to my friends there. What was I saying? Oh, yeah. Let's take a peek at the other markets and see what they're doing. Let's look at gold and silver. Let's look at... Somebody asked me to look at total 2 and total 3. So let's take a peek at total 2 and total 3 as well, which those are the charts minus... so total 2 is the charts minus Bitcoin, and then total 3 is it's minus Bitcoin and ETH, if I remember right. So let's take a peek at those total charts. Let's start with the total charts, and then we'll go from there. Let's see, total 2. So this is the market minus Bitcoin. Looks so much like the ETH chart. I mean, that's what this chart looks like. Is it looks very, very much like ETH. All right, so I look at that. I look at this and I'm like, okay. You have boom, 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 boom. You got 5 waves right there. This is 3. 3. I need 5 down. And this is just the beginning of sorrows here. And we're coming down here. That's what that looks like to me. Initial pump. 3-wave move, return, back down. So that's what total 2 looks like to me right now. If this trend line breaks, that is very, very, that confirms. If that trend line breaks, that confirms what I'm thinking. Let's look at total 3. Okay. So this is the crypto charts minus Bitcoin and ETH. Same kind of thing. It's not as clear what that is, though. Yeah, I don't like that chart as much. It's not as clear, but again, what is this? It just didn't. That's what it looks like to me. Down. Let's finish this thing out. Then maybe. Then maybe we go. Or crypto as we know it dies and it gives rise to a new crypto. So I think you got to understand, guys, crypto as you know it may not. Only what has utility for the future and for the new AI economy that's coming. Only the utility tokens are going to last. All these crap coins are going to die. And I think we need a bear market in Bitcoin for these crap coins so they can die, and the market gets cold, and the real utility tokens can rise to the top. So yeah. All right, let's take a peek at NASDAQ. All right, NASDAQ is getting a healthy pullback, very healthy. If you'll take a peek at that wave right there, that looks like about what we're doing here. I would expect to see some more downside. That's what I would want to see or expect to see. So watch out for that. That looks like that's what's going on. We're getting a correction back to the upside, retest, looking for more down. Okay. When I look at the weekly chart of the NASDAQ, out of all the charts, that gives a very, very finished look. Okay, that's very much a finished look. Where you got 1, 2, okay, or that's an then we got 1, 2, 3, 4, 5. So I need a 3-wave correction back down to this region, and then that gives rise to a bigger move later, which that's a possibility. Or, come on, or 1, 2, 3, 4, 5. It's finished. Multi-year bear market. Okay. I think more likely is we need a wave 4 here. Now this is going to be multi-years bear market, and then it's going to give rise to the pump, the AI pump in the NASDAQ. So as AI and technology takes off, we're going to get an exponential rise in the NASDAQ chart. So that's a real possibility, but multi-year bear market here, giving rise to big pump later. So that's kind of where I am on the NASDAQ. S&P, same could be said for the S&P, that we're in a wave 4. Though it's not clear. I mean, just looking at that monthly chart, that doesn't have the sense of a finished, wave. When I look at that looks like a 1, 2, right? This looks like some kind of a wave 3, all kinds of divergence going on. So I think a wave 4 is coming, followed by a wave 5. Okay, multi-year bear market. It's going to take a while to develop. It's not going to go straight down, and then we get the next pump of and that would give me a nice 5-wave shape for sure, right? Gold. Let's look at gold. Gold's just going parabolic at the moment. Gold is very, very overbought right now. It needs a healthy pullback. Remember, pullbacks. See that pullback right here? I mean, that was like 5 years right there. That pullback. So if we could get a pullback, I kind of think while we're in the multi-year bear market in the in maybe crypto, maybe S&P and NASDAQ. I think we're going to see gold continue to go parabolic. Okay, once it finishes, over the next several years, as it goes parabolic, which I think is possible. Okay, then there's going to be a sell-off of gold back, and that's what's going to pump the crypto market. And so when we get back out of gold, when the money gets transferred to the new economy, that's the way I think it's going to play out. So I still see, I personally believe we're in a multi-year bear market. We've begun it. We're going to be trending down over the next 4 years. Over Trump's presidency, Trump is going to get blamed for it. But it's the New World Order's plan to move their money out of markets into gold, let gold skyrocket, then they'll move out of gold into the new economy that's created out of the ashes of the burning down system that we're in. They have to kill this current system, but they have to transition their money out of this system into the new system, and that takes a lot of time, guys, and that takes a lot of manipulation and moving this world in the direction they want to move it. It's all planned. But it just takes a while for them to execute the plan. But that's kind of where I'm seeing seeing things. So I still very bullish on gold for now. Are we going to get a big pullback? Probably not a 5-year pullback like that, but maybe a couple months, then pump, a couple months and pump. Silver, I'm waiting for silver to break out, guys. Silver is threatening a breakout. I'm waiting for silver to catch up with gold a little bit. I would like to see silver. Come on, baby. Let's start rocking. She's ready. She's ready. There's a lot of room to go here, but she needs to start moving here soon. But silver looks like it's getting ready to break out. So that's good. We'd love that. I'm a big investor in silver for sure. So, okay, guys, that's the way I see the markets. I hope you enjoyed Sunday Night Charts. Let me know if you enjoyed it. And make sure you like and subscribe and do all that jazz if you don't mind. But, no big deal if you don't. I've been doing this a lot of years, guys, and thankful for all of you who show up every week. Y'all are amazing people. And I'm this nobody here in Michigan just offering my ideas. I hope they're helpful in some way. But anyway, you guys have a fantastic night. Let's see what happens. And Chemo, thanks for being here as always. Adrian, glad you got to hang out one night. You stayed up. And I know it's pretty late where you are, so we're pretty early, I should say. So thanks for being here, buddy. With that said, guys, y'all have a fantastic night. We're gonna call it a night. See you later.